One of the roadblocks that we've had recently and that you've noticed as well is LLCs. Why would somebody put a property in an LLC?
So I think generally speaking, the major benefit of an LLC or any kind of corporate structure entity is from a liability preservation, right? If you have a lot of assets, you want to try to segregate the investments. In Rhode Island, we have to pay a minimum $500 tax filing every year with the state of Rhode Island for a corporation or LLC. So there's, I'm kind of on the fence as to whether or not you should absolutely put it in or not, because there may be some other trust opportunities. There may be some other preservations that can be done through insurance.
If somebody has a building in an LLC and that building is their only asset in the LLC, isn't there a certain rule that a lot of people don't know about that could affect them when they're going to sell?
So there's a lot of things that can happen. I mean, first of all, if that's the only building that you have in the LLC, just to step back for a minute, you need to make sure that you are making certain to handle all of the corporate protocols. If the seller owner has been manipulating and commingling monies and doing things that make it so that they're really just an extension of the LLC, then that very well may not preserve the asset as intended. Ultimately, your question was a relatively new law that we're seeing in the state of Rhode Island, which says in the event that any type of entity structure is selling the majority of their assets, then the owners have to give a notice to the Rhode Island Division of Taxation prior to closing, a minimum of at least 5 business days in advance of the closing.
Why? What's the big deal?
Ultimately, I think that the state, I mean, I don't know, I'm not legislatively connected, but I think ultimately the state is looking just to make certain that we have all of the respective taxes due paid as part of the exit. You know, they know that this real estate is being conveyed and it limits their ability to attach. So they want to make certain that we are compliant with all of the tax filings on behalf of the entity. So I think that's the motivating reason.
What else would you consider on that list, you know, of the most important, something that people may not know they should know?
There's also the idea that an LLC or any kind of entity structure has to have proper signing authority in place. You know, like, as I mentioned before, you can't just show up. You have to make sure that if there's multiple members, everybody has signed off on the sale. Everybody is agreeable to the terms and that they've designated a signing authority. You also need to confirm that all members of the entity, if it's an LLC, are Rhode Island residents. So that very often does become an issue, because if you have, I have clients who are 2 brothers. One lives in Rhode Island, one lives right over the line in Massachusetts. They buy and sell real estate in Rhode Island. Well, that's going to be a problem because 50% of that entity is a non-resident as a function of the brother living outside of the state boundaries.
What's the tax rate on that?
6%.
Question for you with the state withholding tax, okay? Because a lot of people have questions. Is that
huge implication?
Is that tax? Is that given back if they can prove that they've paid their taxes, or does that tax just stay with the state?
So the way I explain it is it's basically capital gains to the state of Rhode Island. That's my understanding, is that if you are not a Rhode Island resident and that you are actually having a gain on the sale, then you have to pay your share to the state as a result of your gain. Think about it as capital gains on a federal level. This is on a state level. But, big caveat, it's based on the gain, not on the net bottom line. So the idea that it's a quote-unquote withholding means that you may get a percentage of it back if you don't do any filings in advance.